Hi, good morning. Yes, this video should be out in another 30 minutes or so after I've done recording. So it's morning in my end. It is a few minutes past or to 9, 8:45 a.m. Nigerian time. And this video is about Access Holdings. Access Holdings is the parent company of Access Bank. The word holding bank, they're kind of used interchangeably because even though the holding company is a listed entity, the bank has an older history, and essentially the Nigerian banking arm is the biggest unit. So I'd use Access Bank, but in reality, the listed entity is Access Holdings. It's the biggest bank by assets in Nigeria. It's also of the Fuga's banks. It's also the biggest by assets. I'm looking at the asset base for asset Q1, and assets has 39 trillion in assets. Close to that is Zenith, 32.4 trillion. So here's some napkin math I just did on where I think assets should end 2025. It has lagged behind its peers in terms of dividend payments, which are a big deal for investors in Nigeria because the company has been in growth mode, acquiring units and banks across Africa and all that. So it's probably at the consolidation stage, and anytime from now, we should see a much better performance with respect to dividends. So for Q1 2025, the first 3 months of 2025, the bank made 1.3 trillion in gross earnings. Gross earnings is the total revenue made by the bank, 1.3 trillion. And it made a profit after tax of 182.7 billion. So my estimate where I think 2025 will end is it should end 2025 with somewhere between 5 to 5.5 trillion in gross earnings and somewhere between 750 to 770 billion in profit after tax. Now, for earnings per share, which is profit per share, I think it should end the year with somewhere around 14 naira and 50 kobo in profit per share. And so, even if you look at where the price is, current price as at yesterday closed at 21 naira and 3 kobo. If it ends the year with 14 naira and 5 kobo, it's clearly undervalued. There are different ways to value banking stocks. The usual way and the standard way is to look at a price to book ratio, or you can look at tangible book value per share. And so if you're watching this video on the website, greentickettle.com, I've published a more detailed outlook showing all the breakdown, the splits, operational splits, geographic splits, and the likes. So I think that, in my view, and I'm using a conservative estimate of, okay, it should trade at about 2.5 times its earnings per share. And that then gives a target price of 36 naira and 25 kobo, which will be some potential upside of 70.18%. Now, aside capital appreciation, which is an increase in the value of uh, a increase in the share price of a stock, right? You have dividend yield. Now, Access paid a really tiny dividend yield last year. They paid a total of 2 naira and, if memory serves me correct, 2 naira and 50 kobo. They paid 2 naira and 5 kobo final dividend. I think they paid for the 5 kobo as interim dividend. So for this year, my estimate is taking the total dividend because I don't know the split. I am very likely by June, July, half year results should be out, July actually. And so if need be, I can then do an update video on this. So my estimate is for the total dividend what I think they will pay for 2025. That should be somewhere around 4 naira to 4 naira and 35 kobo a share. So if you work out the dividend yield, which is the total dividend divided by current price, you get a dividend yield of somewhere between 18 to 24%. So in my view, the estimated total return that this bank should earn shareholders and investors in a year is somewhere around 90.6%. Now, please note, and I've written this in red so it's quite clear, this is not financial advice. To your own research. Access is a major banking stock, so I'm sure if you check online, you'd see loads of free research where you can arrive at your own conclusions. My estimates are not cast in stone. I could decide to review this by half year, depending on how well I'm off, or how close, or how far they even exceed estimates. So have yourselves a great day. Any questions, feel free to drop them in the comment section.